Hello and welcome to the Cryptocurrency News channel. Well, the job reports were very good today, but the crypto and the stock market actually fell because of it, which might be counterintuitive, but I'm going to explain why that has happened. So let's get on with the numbers. So non-farm payrolls, which is what the jobs kind of gauge by, increased by 263,000 for the month, which is slightly short of the Dow Jones estimate of 275,000. But the unemployment rate has actually fallen to 3.5%, and the job market overall has stayed strong. Now, usually that would be a good sign for the economy that the job market is strong. It means people still have money. But because of the evil Jerome Powell and his treacherous ways of actually trying to tank the economy, this may not be so good. And the reason why is because, of course, interest rates. If the job market was poor, the Fed might have actually considered pulling back on interest rates and maybe only raising by 50 basis points next November, and then maybe not raising at all in December if the job report was bad. But since the job report is good and the economy seems strong, they're trying to tank the economy to cut into the inflation. Now, this doesn't always work, and we could always end up with stagflation, and I'm not really sure if they're considering that possibility. But that is a very real possibility facing us, especially if the oil prices remain high, which is not something that the Fed can do anything about. But they can raise interest rates, and a strong employment market and a job market will actually make them basically be dead set on 75 basis point raise in November, and of course, probably 50 in December. So people are shaking in their boots because of that. And yes, we are above the historical neutral zone of 2.5% by quite a lot. So they're trying to restrict the money supply to force inflation down. Now, the UN has warned against this because it's kind of screwing up the world economy. Now, so they're really trying to force inflation down. And with the situation as it is right now, they're really not going to pivot probably until mid or late next year. Some things have started to come down, but many things continue to go up, as we will see with the CPI report next month. So people are looking very gloomy for the market because for some reason the market does not really move on employment rates or good numbers. It only cares about interest rate and the availability of money to the public. The housing market is obviously crashing. Hopefully the car market will come down, but that's really dependent on the chip market. So a lot of new stuff actually going on here, and I think the Fed is kind of going the wrong way about this, and they risk getting us into stagflation. But that is the reason why, even though with good economic numbers for jobs, that actually forces the market down even more. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.